Welcome to the Stocks with Josh show. Hey guys, the markets held a very critical line of support on the S&P 500. If we stay above that line, we're likely to continue bullish and get the pop that a lot of people have been looking for, that I've been looking for. But if we break beneath that line tomorrow, we are going to probably have the confirmation that we also know that these markets could fall off the cliff and go to the next leg down. I'm going to answer some important technical questions and strategies on the short ETFs that I've been talking to you guys about regularly. This video is going to be full of prep and education. It's what you guys need to be more successful traders, so I encourage you to watch it to the very end. Let's fire things up by hitting the like, check and make sure that you're subscribed, and don't miss the important market, stock, and crypto calls. I make them every single day. Join the Stock Josh family by hitting all notifications on the YouTube bell. Okay, in the last 24 hours, I've got some very important questions in the comments here and over on the Moomoo app, and I'm going to try to answer them for you guys today. This, in my opinion, is going to help everybody. In addition, I'm going to review some chart technicals to help you guys understand those short ETF plays and what I expect to happen in the markets. Making real money trading is about timing and patience. And you're never going to get control of your patience if you don't have the right expectations. And that brings me to a comment that I got today over on the Moomoo app. This gentleman shared, the company I worked for announced layoffs today. I've been building up cash to quit and attempt to make my living in the markets for quite some time. But I was still a ways out. The bankroll is not quite where I wanted to start from, but I'm going to give it a go. I'm really grateful for this group and for all the lessons I've learned here already. Peace and blessings, y'all. First off, the fact that this company is laying off employees right before the holidays, that is a jerk move. In my opinion, it's a sign of mismanagement, so shame on them. But this brother was smart because he was cashing up. So based on him sharing his story, I wanted to lay out a really strong truth to becoming a successful trader based on my own life experience. Now, not many of you guys may want to hear it, but if you take it to heart, it'll be a very valuable lesson. I've done this for a long enough time to say with a strong degree of certainty that the way to be successful in trading is to be set up to win. So how do you get set up to win? I'm going to give you guys 3 truths for real success. Number 1, you have to be honest, truthful. We're talking about moral integrity. If you are married or you have a life partner, anybody that you share expenses with, you need to tell them exactly what you're thinking of doing, exactly how much money you're thinking of risking, what your metrics of success or failure are going to be, which means that if you lose half your money, are you going to stop? Or will you quit when you lose all of it? Don't, my friend, lose your job and your woman or man by not counting the cost and sharing your plan. Everybody needs accountability. And then we have number 2. You have to be able to afford the money and the time, which means that you cannot expect to pay your bills with your wins. Because if you lose, now you have no job, you got no woman, and you've got no home. If you are serious about becoming a professional trader, then you have to scale back your expenses to what I call subsistence living. Subsistence living is the condition of just having enough food and money to stay alive. Now, I have a friend, for example. Him and his lady have good, flexible jobs. He's a commercial painter, which means that he can paint a house, and then one month he could choose not to paint. These guys intentionally live extremely below their means. They've got a studio apartment, paid off cars, and they do all of this so that they can travel the world regularly. This guy's Instagram account is an absolute dream. So if you want to become a full-time investor, you have to scale your life in such a way that it could possibly work out. And then finally, number 3, you need to take education seriously. Make yourself learn the charts. Invest in learning. Get help. Get a community. If you don't have it, start off, get that 20 free stocks that they're giving away for Christmas, as well as the chance at $60,000. That would set you up nicely for this new journey. Then you can join the Stock Josh family chat group for trade ideas and to bounce your trade ideas off of others. Now, let me share a text that I got in the chat today. It says, a few months ago, chatting made 0 sense to me, but it's starting to click. I didn't realize how much I've been absorbing. I got a lot of learning to do, but feels good to say I'm making objective progress. We have some very smart people sharing in the chat group every day, and it helps. I'm going to make one small suggestion for where you could start your learning journey. Make sure that you simply understand the order types. You need to know the limit, the stop, the take profit basics. Understand them thoroughly and use them. Make that your goal number one for the new year. Mumu, on that note, offers 8 different order types. Not every trade platform has that type of smart trading. Make sure you learn each one inside and out. There's a link in the top pinned comment for Mumu. And for the guy that lost his job right before the holidays, first of all, he got a lot of affirmation from the chat group. I'm going to say, we're here for you. We'll do this journey together, and peace and blessings to you, my friend. Okay, for one of the most asked about subjects is the short ETFs like the SQQQ and the SPX. Guys, I'm going to expound on my game plan with absolute clarity, and I'm going to show you guys the technicals. But before I do, I want to talk to you guys about the risks with trading the 3X ETFs. I don't want you guys to be surprised by the potential negative outcome. I want you to be prepared if it doesn't do what you guys are thinking it might do. Now, there's a factor called return differential. You need to know about it if you're going to trade these ETFs. I'm going to explain how a standard ETF works first. ETF is an exchange-traded fund. Now, a normal ETF like the QQQ, they're managed by companies that actually own the stock in the diversified portfolio. So when you buy the ETF and it goes up in value, the profit is the rise in the value of the stocks. But the SPXS is different. It's an ETF that's managed by Direxion Daily, and they don't own the stocks, but rather they own options, futures, and derivatives on the stock. They're trying to daily match the SPXS to the SPY. That's the S&P 500. Now, sometimes they get that right, and sometimes they don't. A very good example of that is when you go back to 2018. The idea behind these ETFs is that it's a 1 to 3 move. But in 2018, the SPY went up 18% and the SPXS went down 71%. Now, if it were just a potential loss of 3x, it actually would have gone down only 54%. But because of what's called that daily recalculation, the final drop actually worked out to 71% down. The difference between the 3x expectation and the actual outcome, that's that return differential. This is why you don't typically hold these. These are not meant to be buy and hold assets. They're meant to be bought and sold relatively quickly. That's because of the daily calculation and the effect on the return differential. So in addition, the XPS and the XPL, that's the version for going 3x long, they're not free to use. There's a very small fee that is taken from the holder. The annual fee is actually only less than 1%, but you do need to be aware that every single time you buy or sell, some portion of your capital is going to that 1%. 3x ETFs are absolutely higher risk than stocks, but some would argue that they're lower risk than options and shorting. And they're definitely less complicated for someone to begin to learn before learning options and shorting. Now, if the markets are crashing and you don't have any tool for hedging your long investments, you can only go one direction, and that's down. So there's value to these for hedging and for profit taking. I typically start all of my trades with these ETFs by buying the stock outright. Normally, if I'm going to trade calls and puts, I normally buy those on the SPY. I will sometimes buy those on these ETFs as well. But the SPY has advantages of implied volatility, which could enable me to get a higher price range. That's a whole other conversation for another day, but it's another level of something that needs to be learned to really master these trades. The reason that you would buy one over the other is largely based on how much money that you have to work with. If you wanted to put less money at risk, you might buy the call or the put on these ETFs. But if you had the money, it would make more sense to simply buy the stock outright. And it would make more sense if you're going to do an option to just buy a call or put on the SPY. All right, quick mention for one of my chat group members. He played a lucid put based on the EV video that I made the other days, EV winners and losers. And he had this experience. It reads, that lucid put I had the other day, I couldn't sell it at the 70% profit that I made because I was out of day trades. So instead, I sold it for 140% the next day, LOL. So I don't know, man. It can help risk and even garner more gains sometimes. He was talking about the pattern day trader rule. He wasn't able to sell that option for a 70% profit yesterday. And because of it, he was able to sell it today. Had a bigger drop. He was able to get 140%. So I thought this was a great story. Sometimes we make mistakes. They cost us money. In this case, he was blocked and it actually made him money. Okay, let's talk the SQQQ and the SPX technicals. The S&P 500, it's not in a confirmed free fall just yet. We have to pull back, but we have actually respected this ascending line of support. This is where we could build up to another push up to the 4,100, 4,200 area that a lot of people have speculated that we might hit. This is marked by the blue line. So if you load up on short plays right now, you need to be aware that if we get that push, you're going to get wrecked. I'm swing trading the SQQQ and the SPXS right now, but I'm not in heavy. I've given my target for a heavier long position in the past. It hasn't changed. It's under $40, and ideally a hit on this support line, X marks the spot, around $38. Now I got this comment from one of the followers, Pickle Rick. He said, you said 38 was your buy zone for the SQQQ. Go back and look at your old videos. I'm going to say, yes, Pickle Rick, that's still my load up buy zone. Nothing has changed. Okay, puts on Tesla and Target have been profitable. Coin, Mara, those have crumbled as predicted. Calls on Baba and Tall have popped. I've gotten a ton of comments on NEO, so I'm going to touch on some technicals there. I identified that NEO has a lot of resistance at $13. It could hit as high as $15.50 as shown on the circle area of the chart. Now, I've studied the RSI and the current momentum patterns. In my opinion, they point to a possible pop and then a drop. And here's the bottom line. If NEO breaks back below $13 after we get that potential pop and we don't get some amazing news story, it's headed below $6. So you need to keep an eye on it. I also want to point out that all the Chinese plays have been firing on all cylinders. And even though NEO is up, it's lagging in momentum. Now, I want NEO to succeed. We just have to mind the charts. On another note, someone took issue when I said that the government doesn't like Tesla. And on that note, I'm going to play this small clip.
You know, like Biden held this EV summit. Didn't invite Tesla. Invited GM, Ford, Chrysler, and UAW. An EV summit on the White House. Didn't mention Tesla once, and praised GM and Ford for leading the EV revolution.
Guys, Elon always has somebody on blast. Man, this guy is all over the place impacting culture. Tesla has a ton of opportunity ahead. And even if they don't get access to that government money, I'm long Tesla, but at a better price. I still think that we're going to get that pop up and it's going to give us a bigger move down. I'm going to let you guys know when I'm loading up. All you have to do, hit the like, show some love. Make sure that you are subscribed and that you've got that notification bell turned on for all notifications. Take the opportunity right now, guys, Christmas time, to give those 20 free stocks to a family member. Open them up a Moomoo account, and then you guys can come over and join my chat group over there. As always, peace and blessings, my friends. Take care.